cool. Well, thanks all for joining. We now have one last talk by two incredible people from ChainSafe. I'm really excited for it. So first up, we got Lorena Mance, who's the general counsel or legal counsel here at ChainSafe, and Cindy Chau, who is our lead designer. Sorry, I just have to find you first. Okay, started, found one. And two. Oh, hey, Lorena.
Hey, how are you?
Thanks, how are you? Cindy, I'm having trouble adding you as, oh, you can just add yourself, that's why.
Yay.
Okay, so just so everyone kind of has some context here, this talk is going to be exploring and going over an overview on the challenges regarding fraud in crypto and securities. So thank you both for being so patient with all the delays today. I'm going to just take it away. Thank you so much. I'm looking forward to this.
Hi, guys. Thank you for joining Cindy and I today. I'm going to share my screen. Okay. So as Aiden said, we're going to be talking about frauds and scams in cryptocurrency, the implications, and securities law.
So we got our summary for what our presentation is going to be about. We're going to start off with the most high-profile crypto crime cases from a lawyer's point of view, and we're going to talk about how those stories ended. Basically, how the law consumes those scams, and lastly, we'll try to take a look at leaving crypto crime for what it truly is, which is a red tape salad.
So let's get into it. As I'm sure all of you know, just taking a look at the media, there are a lot of scams out there and a lot of really vulnerable people are losing a lot of money. Basically, it's been getting worse given the pandemic. So how do victims usually get lured in for these smaller white-collar crypto scams? So usually through recommendations that seem to come from a friend on social media, some unsolicited emails, an online ad promoting a fake cryptocurrency website, some sponsored ads spoofing legitimate cryptocurrency websites, other pop-up ads, or private messages on sites, social media sites like Facebook, Instagram, and LinkedIn from fake profiles. So 5 types of crypto scams that we're going to be talking about today. So there's hardware wallet theft, which is basically where the wallet's compromised, which allows hackers to steal. There's exchange scams, so where there's no regulatory body overseeing crypto exchanges, that makes it easy for there to be exchange scams, and this is the case in many countries. Then there's fake ICOs, where websites using fake ICOs instruct users to deposit funds to a compromised wallet. The example that we're going to be talking about is Centratech. There's cloud mining schemes where there's a lack of transparency about the risks and costs of mining, and this is no longer recommended as a good long-term investment strategy for people in general. And then there's multi-level marketing, so schemes offering naive investors quick and large profits, and we're going to be talking about Quadriga. So fake ICOs, Centratech, what exactly happened here? So this is a US blockchain venture that was backed by several high-profile celebrities, including Floyd Mayweather. It was sued recently, and it stands accused for fraudulent ICOs, material misrepresentations and omissions, fraudulent claims that the company had partnerships with Visa, MasterCard, and Bancorp. The executives of the company ignored cease and desist notices delivered to the company in 2017 from Visa and Bancorp. They made up fictional executive biographies, and they falsely claimed investors would be paid a dividend that they were not. So basically, the U.S. Securities and Exchange Commission filed a claim against the defendants, the executives of Centratech. So they claimed that the company violated several provisions of the Exchange Act and the Securities Act. And in this claim, the SEC sought relief that included restraint from future violations, civil money penalties, and disgorging of all ill-gotten gains, permanently barring the defendants, the executives of the company, from serving as officers or directors of any public company, and permanently barring them from participating in any offering of digital or other securities, and any other relief that the court sees fit. So basically, the court sought prison. So the company's defendants are currently undergoing prosecution, and basically the prosecutors emphasize that fraudulent ICOs leave victims with little recourse because it's often difficult to trace investments that are made using cryptocurrencies. And the prosecution stated that a significant prison sentence will serve to deter others who may consider engaging in similar crimes, and buttress, which basically means make better confidence in the financial markets by sending the message to the investing public that people who raise money through lies and deceit are going to be appropriately punished. So basically, the prosecution's objective here is not just punitive against these defendants, the executives of Centratech. It's also one of deterrence, prevention, and increasing confidence in the financial market. So there's the issue of market manipulation. So we're all well aware that blockchain is really popular and exciting right now. There's a lot of hype, and then there's a lot of fraud that comes with it. So the US Securities and Exchange Commission has taken action against companies that have made false and misleading statements about blockchain tech in an effort to pump up the price of the stock. But they've emphasized that this is not a new kind of fraud. It's the same old story, they say, where a company takes advantage of a hot trend, changes its name, and makes baseless claims to attract new investors to pump, then dump the stock. So a form of market manipulation is wash trading. It's an illegal type of trading in which a broker and a trader collude / cooperate to make profits by feeding misleading or false information to the market. So an example of wash trading that hits close to home is that of CoinSquare, which I'm sure all of you are aware of. This July of 2020, the Ontario Securities Commission panel approved a settlement with CoinSquare. Basically, the executives agreed to resign from their positions at the company. They paid administrative penalties. They were banned from acting as directors or officers of other market participants for 2 or 3 years. And also the company agreed to implement substantial corporate governance improvements to prevent this type of market manipulation from occurring in the future. So in addition to market manipulation, there's also the fraudulent issue of Quadriga and Ponzi schemes in general. So I'm not going to go into the details of what exactly happened with Quadriga. I'm sure you're all aware, but basically the Ontario Securities Commission has put together a very extensive report on what happened. They've stated that basically Gerald Cotton, who died in India, misappropriated millions in client assets to fund his lifestyle. And in its final months, the company had almost no assets left and was operating like a revolving door in which new client deposits were immediately rerouted to fund other clients' withdrawals. So over 76,000 clients of Quadriga were owed a combined $215 million in assets. And Ernst & Young, the company that has been dealing with the bankruptcy and insolvency proceedings regarding Quadriga, was only able to recover $46 million in assets to pay out to clients. So the OSC basically provides this breakdown of the money and what was able to be recovered and what wasn't. As you can see, only $46 million was. So this has obviously been a huge problem, gained a lot of traction in the media, and the victims are still looking for recourse and accountability, and they're not getting it. They received cents to their dollars back. And the Ontario Securities Commission basically concluded that the main issue here is one of mitigating risk while fostering innovation. They state that what happened with Quadriga is in fact an extreme example and not necessarily representative of the broader crypto asset trading platform industry. But they emphasize that these events do serve to highlight for investors the risks that can arise in relation to crypto asset trading platforms, particularly those that are not registered. So while the OSC cautions investors about these risks, they do remain committed to working with the industry to foster innovation. So financial innovation is, at the end of the day, central to our capital markets, and investors have to have the confidence to take advantage of new and exciting opportunities. So with all this being said, what are the impacts of fraud? So it can be argued that there is, in fact, an adverse reputational impact on crypto, and that these instances foster public hesitance in engaging with crypto. These victims are usually vulnerable, and there is a lack of legal recourse for these crimes, particularly given that the defendants or perpetrators remain anonymous, and there's a difficulty regarding bankruptcy proceedings, especially in instances like what happened with Quadriga. So the Canadian regulatory framework as of now, securities law. So is cryptocurrency a security or a commodity? And when does securities regulation exactly apply? So why is securities regulation necessary? The OSC basically states that the rise of ICOs was fueled, at least in part, by a lack of regulatory oversight. And they emphasize that regulatory oversight is thereby necessary. So they state, without legally mandated disclosure or investor protections, crypto technology financing carries significant risks that may not be understood by those who are purchasing the coins or tokens, especially given that the general public is not well informed on these matters. And while the openness of blockchain technology and the often anonymous nature of the participants make these financings ripe for abuse. So this is the argument that the OSC poses to state that regulation is in fact necessary and securities regulation should apply. So basically, in 2017, a novel report came out by the Canadian Securities Administrator staff. It's a staff notice regarding cryptocurrency offerings. So basically, this notice cautions that products or other assets that are tracked and traded as part of a distributed ledger may qualify as securities. And even if they do not represent shares of a company or similar ownership interests, they do. So ICOs can be very similar to traditional initial public offerings, and there is a four-pronged legal test that's based on the Supreme Court of Canada's decision in Pacific Coast Coin Exchange of Canada versus Ontario. That's a 1977 case, which determines whether a coin or a token qualifies as a security or investment contract under Canadian law. So the four-pronged test is basically that a coin or token is a security if it involves an investment of money in a common enterprise with the expectation of profit that is to come significantly from the efforts of others. And to decide whether securities laws apply, the Canadian Securities Administrators look at the substance of the transaction with the paramount objective of the investor protection in mind. So this is a recent Canadian Securities Administrators staff notice dated January 2020, and it basically states, if you follow the arrow at the bottom, that securities legislation may also apply to platforms or markets or dealers that facilitate the buying and selling of crypto assets, including crypto assets that are commodities. So to round about back to the question, the issue of whether crypto assets are commodities or can be covered by securities regulation, it's safe to say that the OSC is intending to qualify them as securities. So what's next? Cindy's going to take over the presentation from now.
Yeah, great. So I hope you guys enjoyed that recap of some hand-picked hot cases of crypto crime. There are some very real-world consequences there. So just to sum up, we see a lot of cease and desists. We see a lot of fines being slapped on people and resignations. So we barely scratched the surface as to what's going on here in securities fraud. Great. Now the ordinary person associates crypto and maybe blockchain as a whole with financing illegal activities. Maybe we should think about it a little differently from a regulatory standpoint. So there's this thing called a red tape salad. Drop it in the chat if you know what it is. I'm just kidding, because I made the term up a few nights ago. So I came up with this word to kind of encapsulate the heterogeneous mixture of legislation that has to be considered when we talk about crypto and blockchain applications by extension. Next slide, please. So basically what I'm talking about is we just looked at securities law. that only covers protecting investors and end users of capital markets. Still highly undeveloped right now, but if we do go the route of viewing crypto as a security, we're going to have to advance on that a lot more. If we go the route of seeing it as a commodity, we'll be looking at digital asset management, even DRM in the case of peer-to-peer file sharing systems. CyberSec law is always something that's going to be there. Hacks and breaches, system vulnerabilities, you know that. So then there's, for permission chains, they might have to consider things like vendor contracts and things like that. And that's not to mention whether these governments are seeking to stifle digital currencies at all, and whether states can collaborate on privacy laws. All right, next slide. So it seems like a super grim and hostile environment for end users of these capital markets. And the reason why we want to look at this is we want the most accurate picture of crypto and digital assets as a whole. I do want to remind people that innovation is provocative. And I say this because I want us to think about that as our complex systems evolve in robustness, so too must our approach to regulating and advocating for these distributed structures in an accurate, real manner. As our market infrastructure will change, laws will have to be rewritten, and investors and users can have some kind of protection. But it's hard to imagine how quickly or how thoroughly this interaction between blockchain and law will happen if the tech sector as a whole is avoiding regulation as a limitation or as a gatekeeping thing, instead of seeing it as an enabler or as an advocate of users. So to frame it a little differently, next slide. I just want to step away from I read this article a while ago, and Vlad Zamfir said it really well, that we have to remember that law is a protocol as well. And since there's a lot of protocol designers at this conference and systems engineers at this conference, often we transform our protocol so that it doesn't interact with the law. I mean, that's understood because nobody wants to be the next case law. I mean, in this time, in December of 2020, institutions are warming up to the idea of CBDCs, central bank digital currencies, but that might mean better or worse for the legality of permission technologies that we work on. I mean, that is to say, we can't use institutional digital currencies or even tech giant currencies like Libra as a blueprint as to what's to follow. So I see that there's a lot of emphasis on incentive mechanisms, security of the software, scalability, high throughput, and all that stuff. But asset safeguarding and user protection is a necessary ingredient to balance the interests of all stakeholders. So to reiterate that, even if you have the best UX, the best infrastructure, and high scalability, crime is still a deterrent to mainstream adoption. It creates a hostile environment for ordinary people. And if we want to build things that have lasting and transformative impact, it's likely that there's going to be a rise or a generation of people whose specialty is precisely to navigate the channel between software and regulation. And we see stuff like that with the Legal Design Lab at Stanford or RegTech's advancement, which are working on compliance for adoption and disruptive technologies. So is there another slide after that?
Yeah.
Okay, so there's this other slide that says, is basically a summary of what I just said. It's that the lack of user and investor protection from securities fraud and rug pulls, it hurts mainstream adoption. That's pretty uncontroversial to say. But when aggrieved parties are spread across the world and the maintenance of these open source softwares are by innumerable contributors, it means that there's a lot, how would I say this? That there isn't shared liability, but there's a lot of people that have a lot of stake in these public chains. So the way forward is unlikely to look like anything that we've seen before. And the first step would be to minimize those negative externalities. Thank you very much. So I guess it's time for questions.
Yes.
Awesome. Thank you so much for that. And excited to be able to share with people kind of the depth in which people at our organization are really thinking about these things as we are, productizing a lot of what we do and really trying to truly holistically approach these things and not just throw these things out there and just pray for the best. Thank you both for taking the time to truly share how much you care about these things and about people that get affected by the stuff that we're building. We got 3 questions. The first one is from Eric. So, I'm very afraid for what it's going to say. I'm just kidding. So it's, what interesting innovations are you most excited about with regards to the intersection of law and blockchain?
Oh, I'll take this one. So I was reading this legal complaint over the weekend. It was from 2018. It was Rogers, which is a huge ISP here in Canada, versus a small peer-to-peer file sharing system. It was more like LimeWire than IPFS, but it counts. So, and what the legal complaint was saying, that apparently there's all these production companies that are rallying up. I'm not being ironic, but I find it funny that the service provider was saying it was the production companies, and the production companies didn't file a class action lawsuit. So since I've been reading a bunch about peer-to-peer file sharing, that's kind of a red flag. Anyway, they filed this complaint that said, look, there's copyright infringement going on. There's like people stealing our productions and making copies and selling it and pirating. Yeah, we know the deal. You get that threatening email and you promise to never do it again. Anyways, so one interesting innovation that I've seen in the intersection of file sharing copyright infringement with respect to blockchain is that you can create, it's sort of like a timestamp, but you can also, or like a signature, and it shows when it was the original, at what time it was created and where. So I think that's more like an NFT kind of thing, but applied to film and like TV shows and media and things like that. So that's one thing. Totally.
Thank you for that answer. Sorry, I was just in the chat responding to a point. So yeah, do you think more could have been done to make an example of Centratech? And this could have been maybe more preemptively and after the fact as well, which is them, it seems, going to prison. So it seems like a lot there has been done. But I mean, maybe before we got to that place, right? And I'm not sure what the affiliated people had to do with, or if they are being kind of added to the class action lawsuit, or sorry, just the prosecution against Centratech. But yeah, would you mind kind of giving us some more context there?
I think what I would say about, so it's 3 people. It's the directors of the company that currently face prosecution and prison time, and it's unfortunate, but I think that they're being made an example of, and I think it's necessary. The prosecutors have used like really strong language as to why they should be made an example in this sphere to prohibit this type of activity from ever happening again, especially because it was just so, it was like very negligent and blatant misrepresentation, and I mean, yeah, so the prosecution's looking for prison time, and I see it happening. Just the threat that they're being threatened with prison time is probably a good thing in this sphere. But that's all I have to say for that.
Cool.
Yeah.
Cool. Thank you for that answer. And I guess this one is more just maybe advice to someone who's getting scammed in our chat. But what are the signals of a crypto scam?
I'm sorry for laughing. But one time I almost fell for this scam where it looked like a Binance link, but then it was a sketchy URL. So check the address bar, people.
Also, a lot of these scams are employment related these days. So a company will offer employment. A company, there's ways for people to find resumes very easily online now for people looking for employment, and they'll contact them and they'll basically, I think the biggest indication of a scam, especially relating to crypto, is profits for very little in return, so very little effort. That'll always be shady. If you're being offered employment by some kind of company that you can't really, you should be able to do your research, to do your due diligence on the company and any reviews relating to it. And if none of that exists, that's an indication in and of itself. So yeah, that would be what I would say. But I think it's really unfortunate because I do know peers of mine working at other law firms, and these firms have a lot of resources, and they get victims of crypto scam come to them as clients, and it looks like a class action is going to be put together because these people were scammed in the same manner by the same defendant. But then when, you know, the lawyers look into who exactly the defendant is, they can't find anybody to act as the defendant. Yeah, so the anonymous nature of crypto especially can't be overlooked. It's a huge problem. And it's a huge bar to legal recourse for a lot of these people being scammed.
Totally. And that's definitely something to look out for. There was, a case that came, a person from Toronto recently, I think it was in Toronto Life, that was, offering, and it was with a legit entity, at least kind of a corporate entity, that was, scamming people into free work, basically, that ended up not being remunerated in this fake crypto. It's interesting how much more nuanced it's become, and almost like an MLM in a sense. It's very interesting. Or it could be just as simple as a URL being a little sneaky. I know a lot of people have been posting that they've been getting text messages from links, basically from what looks like a hardware wallet manufacturer, and some people have been phished that way. So there's just a lot going on right now. So it's great to be having this conversation, and I'm hoping that, those who will be watching this on YouTube and people can share this with their friends and just kind of get a better holistic perspective surrounding all of these very nuanced approaches to stealing your money. Because at the end of the day, we definitely have to be very loud about the differences between the good and bad actors in our space and in the digital world in general.
Yeah, great.
And thank you both so much. Really appreciate you taking the time out of your days. Cindy's been hustling all day or with the conference. Lorena, you do everything you do. So thank you both so much. Really appreciate it. And I'm just looking forward to hearing what you both have to say about these things next year. And, if we've matured as an ecosystem, or if we're just needing to be more aware of the new types of scams that are out there, or maybe both, probably both.
Yeah.
Awesome.
Oh, great. Thank you so much.
Thank you.
Thank you.